Welcome back to Blockchain of Raw, guys. I hope you're having a solid day out there because what I'm about to walk you through needs your full attention. There's good news, bad news, and a whole lot of noise floating around right now. But the reality is simple. The good outweighs the bad. And if you don't understand why, you're going to end up reacting to headlines instead of facts. I don't care if you're brand new to XRP or if you've been holding longer than most people in this market have even known what liquidity is. What I'm going to break down here applies to every single person who has skin in the game. There's a wave of people out there screaming that the Franklin Templeton XRP ETF is 100% dropping today. And of course, that kind of headline spreads fast because everyone wants the big moment, the instant catalyst, the immediate dopamine hit. But you aren't here to get high off hype. You're here because you want to understand what the hell is actually happening so you can position yourself correctly. So here's the truth without any sugarcoating. I spent hours digging into the SEC website last night, and there isn't a single official document guaranteeing an ETF launch today. None. What you can find is the November 4th Amendment filing, and that filing starts the 20-day countdown that ends on the 24th. So yes, it could be today, but treating it as guaranteed is delusional. That's the exact type of sloppy thinking that gets retail traders burned. And before anyone starts parroting what AI-generated posts are circulating, AI is only as accurate as the garbage people feed into it. It scrapes the web, not the SEC database. The number of people blindly trusting an algorithm regurgitating unverified claims is insane. If you can't verify the source, the date, or the filing, then you're setting yourself up to trade based on fiction. And here's where it gets comical. The same creators claiming 100% today don't understand the difference between an effective date, a proposed rule change, an amendment filing, and an official approval. They lump all of it together like it's interchangeable. That's how misinformation spreads in this space. You deserve better than that. If there were an official approval today, it would be on the SEC website. Period. But don't confuse honesty for negativity. The bad news is simply that today isn't guaranteed. The good news, the ETF is coming and the timeline is tight. The 24th is the absolute longest we can be forced to wait. That's not concrete regulatory structure. This entire narrative becomes a lot easier to understand if people stop looking for magic dates and start looking at the actual filings. And while everyone else is losing their minds about whether today is the day or not, they're ignoring a far bigger point, the inflow projections. You've got estimates between 500 million and 1 billion in early inflows for this ETF alone. That's not fantasy. That's not hype. That's actual demand modeling based on institutions that haven't touched XRP publicly yet. And when you combine that with the broader ETF pipeline forming behind the scenes, you start to see the real picture. The ETF is just the front door. It's not the whole house. The thing most people completely miss in moments like this is the institutional context behind what's happening. Everyone gets fixated on a date, a rumor, or a screenshot, and they never stop to ask the bigger question, why would Franklin Templeton even push forward with an XRP ETF? Now, these firms don't make emotional decisions, and they don't jump into assets casually. They move when the regulatory landscape, liquidity profile, and long-term strategic positioning all line up. And whether people want to see it or not, that's exactly where XRP is sitting right now. But before we expand on that, we need to address something that keeps confusing the retail crowd. I saw a subscriber mention Zach Rector's videos, and whether you love the guy or can't stand him, he got one thing absolutely right. The November 4th Amendment filing is the key detail. That filing triggers the waiting period. That filing is what sets the timeline, not a headline, not an AI-generated rumor, not a random tweet from someone who has never opened an SEC document in their life. The filing is what matters. And that's why anyone claiming a guaranteed date before the 24th is either misinformed or deliberately playing the engagement game. Now let's get into the bigger picture, because this is where the good news becomes far more significant than any disappointed expectation about today versus tomorrow. Franklin Templeton isn't a small player taking a random swing in crypto. This is one of the most established financial institutions in the United States, with trillions under management and decades of experience operating inside regulatory frameworks. When a firm like that steps forward publicly with an XRP ETF, it tells you one thing. The internal due diligence they've done is far deeper than anything you or I could piece together. They aren't betting on speculation. They're betting on structural demand. And that demand isn't coming from retail. It's coming from the same ecosystem that brought Bitcoin to global prominence. Treasuries, corporate balance sheets, asset managers, and institutional allocators looking for asymmetric upside with real use case backing it. That's where Evernorth comes in. And if you're not paying attention to that angle, you're missing one of the biggest signals in the market right now. Evernorth is essentially deploying the same strategy, MicroStrategy used with Bitcoin. But instead of capturing digital gold narrative, they're positioning themselves to capture global liquidity movement. This is where people need to stop thinking small. The next wave of demand for digital assets isn't number go up hype. It's corporate treasury strategy. It's balance sheet optimization. It's institutions using digital assets like financial infrastructure rather than speculative chips. Ripple has been building toward this for over a decade, and the NDAs were the biggest clue. Everyone got hung up on the 1700 number that came out in the old court documents. What nobody seems to realize is that number is ancient. Ripple has been onboarding, negotiating, and integrating with hundreds of additional partners since then, and none of them are talking publicly yet. That's why this moment is critical. You've got XRP ETFs forming, you've got treasury adoption forming, you've got utilities forming, and you've got the macro environment shifting into a phase where liquidity is going to start moving aggressively again. The only people who feel late right now are the ones who bought in the 20s or 30s expecting instant gratification. But if you zoom out and look at the institutional timeline, the truth is the exact opposite. You're early, absurdly early. And the irony, the people complaining the loudest right now are the ones standing in front of one of the biggest structural shifts in XRP's history without even realizing it. All right. Let's keep going, because this next segment is where most people start lying to themselves. And that's exactly why they keep getting wrecked. If you've been in crypto long enough, you already know the brutal truth. Markets don't care about your feelings, your dreams, or how badly you want to break out. The chart moves where the liquidity is, not where your hopes are. And right now, XRP is sitting in one of those zones where the market is practically daring traders to make emotional decisions. Don't be one of them. Here's what's really happening under the hood. We're seeing this weird combination of suppressed volatility and expanding volume pockets beneath the price. And before you start celebrating, no, that's not automatically bullish. It just means bigger players are stocking positions while retail waits for some miracle announcement. But you've been around this space long enough to know better. Real moves start when the majority is either asleep or convinced nothing's going to happen. And we're damn close to that point right now. But let me call you out on something directly. If you're expecting XRP to just moon out of nowhere because of a couple hype tweets, you're delusional. XRP's next move, the real move, is going to come from structure, liquidity, behavior, and macro alignment, not from speculation theater on Twitter. And if you don't get that, you're gambling, not analyzing. Look closely at this consolidation range. It's not boring. It's intentional. This is what accumulation actually looks like when smart money wants to build exposure without slingshotting price prematurely. If XRP were weak, it would have already broken down and stayed down. Instead, we're getting these controlled dips, quick recoveries, and a very clear defense zone that institutions aren't letting go of. That's not random. That's calculated positioning. But don't start romanticizing it. Accumulation phases are where most people screw themselves because they expect instant gratification. You throw money in, you check the chart 10 times a day, and the moment it chops sideways, you doubt your entire conviction. That mindset is exactly why you keep exiting right before big moves happen. Stop doing that. Seriously, here's the uncomfortable truth. If you can't handle dead zones, you don't deserve breakout zones. And XRP is in one of those slow burn phases where the real winners are the ones who understand timing doesn't mean guessing the exact candle. It means recognizing when the market is preparing for a shift. And before you ask, yes, the macro side matters here too. Liquidity is flowing back into the market. Stable coin supply expansion is kicking in. And Bitcoin dominance is starting to show early signs of weakening. And that's usually the prelude to capital rotation into high liquidity altcoins. Not meme coins, not impulse pumps, actual utility assets. And XRP is positioned right in that category, whether you like it or not. So, let me be blunt. If you're sitting there expecting XRP to move like some casino token, you're misunderstanding what you're holding. This asset moves when the system it's designed for shifts. And those shifts don't happen every Tuesday. They happen in waves. And we're approaching one. But don't think this means you're guaranteed some hero-level breakout. If the market stalls, if the liquidity cycle pauses, or if Bitcoin decides to fake a reversal, XRP will feel it. No asset exists in a vacuum. And pretending otherwise is how traders blow their accounts. This is where most XRP holders completely misjudge the situation. And honestly, it's the reason they keep getting trapped in the same cycle. Hype, impatience, panic, regret. If you see yourself in that loop, good. At least you're being honest. Now, let's break it before the next move hits. First thing you need to wrap your head around. The market is not confused right now. You are. XRP's structure is actually incredibly straightforward if you stop letting noise cloud your judgment. We're dealing with 3 layers: short-term chop, mid-term accumulation, and long-term structural compression. If you don't understand how these layers interact, you end up reacting emotionally instead of strategically. Short-term chop is exactly what it sounds like, a psychological battlefield designed to exhaust you. Those tiny pumps that go nowhere, those dips that get instantly bought, those fake breakouts that rug 10 minutes later, that's not manipulation. That's the market filtering out people who can't handle uncertainty. If you fall for it, that's on you. Midterm accumulation is the real story. We've got a zone where buyers are stepping in consistently, but quietly, not aggressively enough to spike the chart, but enough to maintain structure. That's how serious players position with patience, not with flashy moves. And if you can't see that, you're not analyzing the chart, you're guessing. Now, long-term structure. This is the part most people pretend to understand, but really don't. XRP's macro setup has been compressing for months, maybe even years when you zoom out. And compression like this is not random. It's the market storing potential energy. But this is where the average trader screws up. They assume compression automatically equals breakout. Wrong. Compression equals potential, not a guaranteed vertical candle. Whether that energy gets released upward or downward depends on timing, liquidity, and external catalysts. And speaking of catalyst, let's be brutally realistic here. XRP isn't some meme coin waiting for a tweet to move. It's tied to institutional flows, regulatory clarity, and cross-border liquidity cycles. That means when it moves big, it's usually because something in the real world shifted, not because influencers on X started posting moon emojis. So, if your strategy revolves around waiting for hype, stop. You're setting yourself up to fail. Here's something else most people won't admit. Fear is controlling their decisions way more than logic. Fear of missing out on the breakout, fear of being wrong, fear of holding too long, fear of selling too early. You can't trade or invest with fear as your default setting. You will lose every single time. And if hearing that stings, good. That means it applies to you. What you need to focus on right now is clarity. Strip away the noise, zoom out, identify where the real liquidity sits, because that's where price is heading next. To liquidity, not to your hopes. And when you map out the zones properly, you realize XRP isn't stuck. It's choosing. The market is deciding whether to attempt a breakout or drag price down to sweep liquidity before the real move. And if you're not prepared for both scenarios, you're not prepared at all. This next phase is critical because it exposes weak hands and rewards anyone disciplined enough to stay objective. XRP is in the part of the cycle where frustration is actually a bullish indicator because it means positioning is happening behind the scenes. But don't get comfortable. Complacency is just as dangerous as panic. The moment you start assuming the market owes you something, it will humble you. Before we wrap this up, there's one thing every XRP holder needs to think about. Seriously. And it has nothing to do with hype, hopium, or whatever prediction people love throwing around on social media. The real story right now is positioning. Not emotions, not rumors, not what some AI bot says, or what an influencer confidently claims without evidence. Positioning. And most retail investors are positioned terribly because they chase headlines instead of understanding structure. That's exactly why so many people right now, especially the new wave that bought in the 28,350 range, are suddenly panicking like they walked into the market at the worst possible moment. But that's not the truth. The truth is they walked in early and they just didn't realize how early. If you zoom out and stop reacting to every hourly candle or every flashy tweet about a guaranteed ETF today, you start seeing what's actually happening. While retail is crying about short-term price fluctuations, giants are quietly positioning themselves for something that retail simply isn't ready for. Treasury companies lining up strategies, institutional inflows preparing to hit ETFs, corporate balance sheet adoption being tested behind NDAs, that number in the thousands now, not hundreds. And when you have all that happening while supply continues to get soaked up from strategic accumulation, what do you think that leads to? A price environment that most people aren't mentally ready for. But here's the uncomfortable part, Bortel. And you need to hear it without sugarcoating. Most people watching XRP right now will miss the big move, not because they're unlucky, but because they can't stop reacting emotionally to short-term noise. They want certainty where certainty doesn't exist. They want guarantees when the only thing that's realistic is probability. They want the ETF today, right now, immediately. And if it doesn't come today, they think the world is ending. That mindset is exactly what institutions rely on to accumulate quietly. They're not panicking. They're not scrolling Twitter for confirmation. They're following filings, amendments, timelines, regulatory cycles, the stuff that actually matters. And that's why the ETF storyline has to be understood properly. Yes, the Franklin Templeton XRP ETF will come. Yes, the filing timeline points toward the 24th as the absolute latest window. Yes, inflow projections ranging from $500 million to over $1 billion are real based on comparisons to similar ETF launches. No, that doesn't mean today is guaranteed. And if someone told you it was 100% dropping today, they were either careless, uninformed, or chasing clicks. This is why you need to stop letting people with no skin in your portfolio dictate your mindset. You need to operate on facts, not fantasies. But here's the big point you can't ignore. Once these ETFs go live, plural, not singular, you're going to see a shift in the structure of XRP's market. When institutional inflows meet Treasury adoption and NDAs finally roll into public utility announcements, the market won't look anything like it does today. The irony is hilarious. The same investors right now complaining about being too early will soon realize they were early enough to catch the biggest transformation XRP has ever had. And the ones who panic out because of a few red candles, they'll end up buying back at higher prices when the narrative flips and suddenly everyone pretends they knew it all along. If you're feeling discouraged right now because the price isn't doing what you want, stop comparing your emotional timeline to the institutional timeline. They're not the same. Retail wants instant gratification. Institutions want strategic entry. One group loses because they can't wait. The other wins because they understand how markets mature. So if you're holding XRP right now, understand this. You're positioned before the wave, not after it. You're ahead of the institutions, not behind them. The real shift hasn't even started yet. And when all these ETF timelines align with treasury accumulation and regulatory clarity, you're going to look back at this moment and realize this wasn't the time to doubt. It was the time to understand this is not financial advice. Always do your own research, make your own decisions, and never invest blindly based on anything you hear.